Hello, guys. Welcome back to another episode of the Mortgage Mavericks podcast with me, Ash Borland. And in today's episode, we are joined by Paul Brett. He is a strategic advisor and leadership coach in fintech, mortgage lending, and distribution. To be honest with you, that doesn't really do justice as to what he actually does or is. We've just been trading stories off air. This guy's been in the industry for 37 years and has seen the rise and I would say fall potentially of some of the biggest players in the industry over that time. And I wanted to bring him on to talk about the evolution of the mortgage industry since the credit crunch and how that has changed and the stuff he's seen so that he can potentially impart some wisdom on to us who weren't there at that time, but actually could potentially see the writing on the wall before it happened. So, Paul, mate, welcome to the show.
Thanks for having me.
Really looking forward to it. So, Paul, before we dive into the actual questions and stuff I want to do with it, just give us a bit of a cliff notes as to who you are. Obviously, I've introduced you a bit here, but just give the listeners a kind of an idea of what you do.
Absolutely. And yeah, thanks. It's great to be with you, Ash, and loving what you're doing. Yeah. So as you say, I've been in the industry for, this is my 37th year in the industry. Very few people, I believe, actually choose to come into this industry. It's almost as if the industry chooses us to come in. And so I started life in the city, actually, at Hambros Bank. And at the time, Hambros was buying lots of estate agencies. So many of your viewers will know Bairstow Eves and Bridgefords and Abbots, etc. And essentially, cutting a long story short, that became Countrywide, and Hambros set up a lender to support that process. And all was going swimmingly until interest rates got to around 15.75%. And Hambros decided that they didn't really want to do that anymore from a lending perspective. And lots of other things happened. And I had a foray into a building society. I was at the Yorkshire Building Society for a few years, which was a great experience. And went across to the dark side of the force. I can see the Star Wars behind you into the world of subprime, which was great fun. And lots of stories for that one. And then started my own business and started a packaging business around 2000. And various things happened in terms of MDA, in terms of regulation, that meant that packagers started to form groups, and they would then speak to lenders and say, look, we're a group of packagers, give us better products and prop fees and everything else. And the small to medium sized packager had been brushed to one side, but the lenders didn't really like that. And me having a sort of a lender hat as well as distribution, I spoke to the lenders and said, look, I'm going to put together a merry gang of small to medium sized packagers, and will you treat us the same as the really big guys? And they said, absolutely, we welcome it. So I founded an association called Freehold that actually then morphed into a small mortgage lender, and everything was going brilliantly until 2007. And we all know, I say we all know, people of a certain age, all what happened then. And it's quite interesting, actually, Ash, because my friends and colleagues in the industry that I've known for so long that are a similar age, it's almost like we've been through a war together. It's like a badge of honor that you got through the credit crunch and you're still here to tell the tale. I did some other bits and pieces after the credit crunch, because at the time there was no mortgage business, and there are a few people in the industry that set up businesses around 2006, just before the credit crunch happened, and they became very successful, and I take my hat off to them, and they're brilliant businesses and still around now. But for those of us that had been in it already and hadn't started a business at that time, it really was like the end of the world. The good times were over, and you might as well give up now. And actually, thousands of people left the industry, especially brokers. I look back with fondness, but I went to catering college for 4 years and I trained to be a chef. And so I thought, okay, there are no mortgages, time to open the restaurant. Quickly realized it was the hardest work I've ever done, the least money I've ever earned. And then the world of mortgages started to come back again. I decided to move on from that and thought, I'm glad I'd do it. I'd done it. Maybe one day I'll do it again. But yeah, so back into the mortgage world, and eventually led me to Foundation Home Loans. So I was part of I want to call it the launch team, really, because it launched in November and I joined in January, and it hadn't really done much business at all. And we had to relook at the whole product set, the brand and everything. I had 6 weeks to really start again from scratch, to get some traction. And that's what happened. I drove the length and breadth of the country, all my mates in packages and brokers and distribution, and said, okay, look, this is a new buy-to-let lender, which wasn't really a new lender at all, because it was a phoenix of a lender called GMAC that had been bought by a company called an investment fund called Fortress, and they'd changed the name to Paratus so they could keep under the radar. And when I had the phone call, I had a phone call from somebody I worked with previously, and they said, what are you doing at the minute? And I said, actually, I'm doing some consultancy for a firm. And they said, look, can we have a conversation with you about you getting the front end off the ground for Foundation, and a new lender called Foundation? And I said, okay, what's that? And I said, so where are you now? And she said, Paratus. And I said, what's Paratus? And she said, GMAC. And I went, what are you talking about? Really? That was great. That was a really interesting time to get that off the ground, because I think once you've had your own business once, you always have that hankering. But I think, if I'm really honest, I lost a lot of confidence to do it again myself around the time. So it was almost like the next best thing. But Foundation at the time had a connection with Lambay, and I got to know John Goodall, the CEO, pretty well. And I left Foundation and decided I had an offer from John to join Lambay, which was brilliant. And I had a fantastic nearly 7 years. And I always, the challenge was getting at the time, the funding model wasn't one that the market really was too keen towards, and pretty much any buy-to-let lender, including the really big ones, over the time that I was there. And we created our own tech. And that was an incredible learning curve for me, because the tech team at Lambay was second to none. The tech and the product guys, I had a huge fondness for them. And I also I would tell them that I felt frustrated for them, because they would hear me say so many times that it's like being a Formula One team, and they're the engineers, they get to build the car, but they don't even get to go out to Monaco, let alone drive the car. They're back in Milton Keynes somewhere and cheering Lando.
The non-glamorous life of
exactly.
Yeah.
But without them, you don't have an F1 car, you don't have an F1 team. And so it was so important for me, and it's a bit of a mission I'm on now, really. It was so important for me to tell the engineers, the analysts, the fantastic work that they were doing, and the positive comments that they were receiving from brokers and actually other stakeholders that sort of slotted into the system. But I felt that time moves on, and time for a change. And I love working with, especially tech firms, but entrepreneurs. I love the buzz and the spark that I see with people that really have that grand vision to really achieve something. Yeah, so that's pretty. Have I bored you to tears?
No, you have not.
No,
you haven't at all. I love it. Like, I absolutely love all of it. I'm one of these ones where I'm actively, one of the things I wrote down this morning on my journal file was like, don't interrupt when people are talking. Because the thing with me is, I have ADHD. People listen, certain people know this who listen to this, is that you're saying so many things. I'm like, that's really cool. That's really cool. That's really cool. And so I want to make sure I stay on task and don't go die, because my intrigue, and I'll go, sod the listeners, let's have a chat. And I want to make sure I honor them. But I think that's what I think is so interesting about your life. It just shows the breadth of the stuff you've been involved in and what you've seen come and go. I think that, and I also love the thing you said then about the team and the people behind the scenes, the analysts, the engineers, is that seems to be that nobody really notices them. They're like the unsung heroes. That is something I see across the board, not just across the board in all financial services. It's especially in organizations which are employed, where you see that the salespeople get all of the claps, and then it's actually the people behind the scenes that are making it all move.
100%. 100%. It's the culture within the industry is the sales team. Relationship is so important in the mortgage industry. Absolutely. Any lender that says they don't need a BDM, in my view, are deluded, unless it is absolutely squeaky clean vanilla, where it just can fly through from a tech basis. And if there's any issue with the deal or whatsoever, the lender goes, no, it's not one for us, and their rates are so cheap that you just have to accept it. Then you might say that's the case. But the reality is that 8% of the business isn't really like that, which I'm sure people will be saying to me that's not true. But in my experience, it is. And it's so important that the relationships they need to be current. They need to be reinforced because it's about trust. And it's about a broker has a client. The client has put their trust in them for what is probably the biggest financial transaction of their life. And so therefore, there's a huge amount of responsibility on the broker's shoulders. So then the lender that they're dealing with, they've got to trust that lender, because the applicant won't blame the lender if there's an issue. They will blame the broker. And they will say, look, you should have known better. Why did you send it there, or whatever? So relationship is so important. So it is encouraged. It is encouraged that salespeople are pretty much out all the time. There is a huge amount of socializing. However, the flip side and the challenge, which you just touched on there, is that your underwriters, your processors, your paraplanners, your tech teams, your commercial teams, your accounts departments, your HR departments, they don't get to then share in all of those good times. And I was always really conscious that wherever I've worked, where you'd have a circuit, and every year, a certain time of year, you've got those awards, these awards, that dinner, etc., is trying to bring somebody else that is not a salesperson. Yes, you need a few salespeople, because those nights are not all about just, okay, we're here, let's all get drunk. It's out. If you're a salesperson, you've got a good salesperson works the room, and they don't stop working. But so you do always need some salespeople there, but actually bring those other people in as well. And I did it for two reasons. One is to show them the recognition, but also that they could see that what salespeople do isn't, if they're doing it properly, all about just getting hammered and having a great time. And they say, oh, actually, do you know what? Yeah, I don't know if I could do what you do all day.
Yeah.
And the BDMs, the ones that do have to, maybe if they've got to do a certain amount of appointments a day and they've got a relatively large patch. Yeah, if you're driving around all day, you get to the end of the day and you've had those meetings, and you might not be in the best mood, but you have got to be a performer. You've got to perform. You've got to go in and smile and be up and, hey guys, good to see you. Although I've probably been around long enough to go in and go, oh, I'm in a rubbish mood. But
yeah, if you do it long enough, they probably
yeah, exactly. You're really honest. But generally speaking, a broker doesn't want to see a BDM that comes in a bad mood.
No,
they want that injection of positive energy, and how can you help me do more business and all this sort of thing. So it's as I say, it's a two-way thing. And I do think the industry is getting better at recognizing those that are not the salespeople, but I think there is more to be done.
How do you think that, I'm throwing the questions out the window now because mine completely love it. I love this. This is great. It's fine because there's other stuff going around. There's some here that I will ask you because they're good points, but there's one a lot of this is keeping that in mind, this idea of, relationships and then people in the back end as well, the technical side of things. And I'm asking everyone this question. Don't worry if you don't know the answer. It's not a big deal, but you just seem to be very in the forefront of that. Is how do you think the future is going to be different with the rise of AI coming in? Because it's something I've been seeing on this show. I've been interviewing lots of AI people. It's quite terrifying in some scenarios, and I'm also lucky I would get involved in AI outside of work. But both those jobs, being a relationship manager, really, somebody BDM is somebody who literally is just managing relationships and keeping them front of mind, and then a technician on the other side, a coder, or things. Both of these people are a threat potentially. But you've been in the industry long enough, and you said something that before we went on air. You said history doesn't repeat itself, but it rhymes, and I love that. What's your kind of spidey senses saying about what's coming over the hill with this?
Yeah, I think that I actually had a conversation with some other colleagues about this a few days ago. As I said, that a mortgage for most people is the biggest financial transaction that they will do. Now, I remember my first mortgage. I was terrified, and I was an underwriter with a mandate at a lender. Okay, my valuation was done for free. My legal services was done for free because it was the good old days, and you worked with a local valuer and accountant and everything else. But I was still terrified, and I knew a lot more than most about how the process worked. So I always say that it doesn't matter what day and age you're in, to then go through that process, and especially if you're a first-time buyer, it's really, for me, it was a stressful time. And I'm sure for many others, it's an incredibly stressful time. And I think that from an advice perspective, yes, AI will be great at assisting the advice and the advisor. But I think that if it replaces the human in that process, I think that, or I'll rephrase it, I don't think it will replace the human in the process for some time, because you, as a broker, you are not just a financial advisor in that scenario. You're a counselor, you're a coach, you're a support worker. Because if a lender's asking for stuff or something's come up on a credit search, oh my God, what do I do? What do I do? Oh, have I done something wrong? Just relax, we can do this. It's fine. I've done it. This is my job. AI is not going to replace that, not for some time. And even though I think that the where are we, Gen Z now? I'm so old.
I don't even know how many gens are at this point.
Yeah, yeah. Is it? I don't know.
Gen Z, I think it is Gen Z. No,
yeah. Is it?
Gen Z, Gen X,
I know I'm a
Gen Z. So we're
I'm
Gen Z and Gen X is you, isn't it? Is that right?
Gen X is the oldies that are coming good right now.
Is that right? And I'm millennial, so it's millennial
Yeah.
and Gen Z. Yeah, Gen Z.
Yeah,
Gen Z.
exactly.
Gen Z is very British. That's why you threw me. Is it Gen Z? I haven't heard it said like that before.
Yeah, I'd like to be a Gen Z.
And no one would want to be a Gen
No,
Z.
actually, no. No, that's a fair point. And that's actually a wider debate as well, Ash, about resilience in Gen Z and Gen Z. So I think that generation, the generation that's coming of age now, if you like, may not want to sit in front of somebody in person.
Yes.
I think that will go away. But I can see more and more of this type of interaction. And that being may have a regular appointment in the diary, but then you may have an app that actually connects you directly through to your advisor, your broker, where you can just have those little quick conversations. I interviewed a guy called Mike Common at Nevo, who's got this messaging app. And I said to him, I said, that just removes the anxiety, because when you're in the industry, it's so easy to forget that the applicant and ultimately the borrower, to them, we are just a faceless gray company that human beings don't actually work at. It's just full of robots. And to actually say, no, there are people here and we're all quite nice and we're here to help. I think that can only be a good thing, but that will be augmented by AI rather than AI replacing it. I do think on the flip side, which you alluded to, and I'm sure you're much more cognizant on it than I am, that AI could replace a lot of the coders, a lot of the engineers. But as I'm not one, although I did say that actually, if I was ever really hard up for money, I would actually pretend to be one.
Be a coder, be an engineer.
Yeah, because I'd go in on a contract, earn a fortune for a few weeks and do this, and then just key a load of rubbish in and then just run out the door after I've got
social media marketers, mate. That is like social media marketers who are not from financial services. It makes me die. Like the amount of people that come in have no idea about regulation, no idea about any of the things that you will be very much accustomed to. Come in, do all of the normal tactics, charge massive upfront fees, and then they disappear. All because it's a bit hard. It doesn't work. Yeah, it doesn't work. You're not selling a gym. You're not selling a bit of makeup. You're selling a regulated product. Yeah. That they're gonna jump on your ass if you do anything wrong. And it literally happens all the time.
But that's a skill, and I'm loving it that you've embraced that because of your mortgage broker background, and it's so needed because we need the bridge. We need. And we were talking about TikTok just before we started recording, and can have a love-hate relationship with it. But I do admire the brokers that are going on it and actually talking about different aspects of the mortgage process, because I think that breaks it down just bit by bit for, inverted commas, your average applicant. But you're generally a mortgage broker. Now you're doing this training, brilliant, but most people are not trained. And it's like, okay, yeah, we know the regulation, but hang on a minute, where do I start? How do I post on here? And what should I do on that? And is this regarded as spamming? Is spamming still a thing?
Yeah. It's very early still. It's really, so that's something like I've been doing this specifically for 7 years of doing it and 5 years of being full-time doing it. And I realized this quite quickly actually and again, we connected it through Monty from that podcast. And I was saying this like to me, like Monty for me was like the first person I saw who was doing, it was like a personal branding. For me, it was like, oh wow, everybody in the industry knew of him. So that was that was a surreal interview, but it was one of those, and great now since. But the reason I say that was that when I first started doing this, thought we're going to change the industry. This is what's going to happen. Because no one was really doing it. Gary Dass was the other guy who's been on the podcast before. I know Gary very well. And it became very clear that you can't change it as one person doing it. Doesn't work that way. And so about 4 years ago, that hit me. It was like, it's only going to work as more and more of us come into the space. And I'm sure you've probably seen this in many iterations across the industry as the industries have evolved and changed, and is that it's that all ships rise in a high tide. So it doesn't benefit me. I work with 21 one-to-one bespoke clients. 20 one-to-one bespoke brokers are not going to change the industry. So creating content like this that helps people, but also I work very closely with my competitors. In fact, many of my competitors are clients in which we just try and build it because it is. And I think that's something the industry doesn't, or some people, the winners seem to get and the losers don't seem to grasp, is that for this to work, we have to have mass adoption. And the only way you get mass adoption is thousands of people doing it, which means it requires more people and also different demographics who relate with different people. We need different ages, we need different genders, we need different nationalities, we need everything. It doesn't just work as just one guy with a shaved head in his studio, in his garden. It doesn't work like that. And I think that's something that I learned that, anyway, I've gone off topic a little bit, but that was something I definitely noticed a few years ago when you say about the adoption of it, because it was like, okay, you can't do this on your own.
Yeah, absolutely. But you are more current, more relevant. I had a conversation, an interview with Rob Sinclair, and Rob has been such a stalwart, a legend of the industry for so many years. Has done so much good work with Amy. And a little spoiler, I'm like, well, so why are you stepping down? And he said he just feels that he's not as relevant as he perhaps once was. And it's time for that sort of fresh, I want to say blood, but fresh ideas and people come through. And it is really true. I will look at some of the stuff that people do on social media, and I'm really open to it because I love it. I love that people are having a go. But some of it does make you cringe.
Oh, it makes me die.
And it does. And some of the recorded interviews, and I think to myself, look, at least pay 50 quid on Freelancer or something to get somebody to actually process your audio. The video, we can live without not great video quality, but actually audio quality needs to be pretty good. It won't cost you a fortune. You can afford it. There are sites out there that can do this thing. And it will just be 10 times better. It'll be 100 times better. Now, I'm nowhere near as good as you, and I'm at the beginning of my journey. But because I look at it and go, I'm going to have a go. And the reason why I'm going to have a go is because I've been around for so long and I do know a lot of people. And I think there are people that have got great stories to tell. They've got great knowledge that they can pass on to the new generations that are coming through, and they can take it or leave it. When I was 30, many years ago, I might have, if somebody started giving me advice, I might be thinking, oh, do you know what? You don't know what you're talking about. But on the flip side, I might be going, oh my goodness me, you are such a mentor. And, name dropping, people like David Johnson, the founder of Shawbrook, was a real mentor. And I would hang on every word he said. And I knew him a tenth as much as many of my friends and colleagues that really close to him. There were other mentors. When Stephen Knight at GMAC, if you were in his company, again, you would be just hanging on every word. Bill Cherry at SPML, there were some incredible people that had done amazing things that you listen to them. And it's up to you. You make your own choices, whether you're going to act on whatever they say or take it in and as something that you are going to embody for yourself, but you listen to them. And I think that sometimes the challenge of generations that can come through there, I want to say, this is probably the old person in me. Sometimes there's like a level of entitlement. Now, there isn't any entitlement. That's just my defensiveness. There isn't at all. But I think that if people come up to you and they don't know you and they come at you as if they've known you forever, and you hang on a minute, I'm a bit old fashioned. Oh, hi, I'm Paul. Yeah.
I find it really awkward. I find that that I would say with that, and there's a couple of things on to the entitlement thing. I get what you mean. I find it very awkward, seeing as I make a lot of content and I'm quite a recluse. When I go to events or go to places, I find it, and again, love and respect to everybody who listens to the show. I love you all. You're very great. But I also find it takes a good couple of hours to adjust to people coming up to you, knowing everything about you or have followed you. And to them, and I respect that, and I'm sure you've had it yourself, you will have had it yourself. It's a weird thing. You never really get used to it though. Like, it's to them, they've got a relationship with you. It's a one-way relationship. They're listening to you, they're hearing you, they're seeing you. But
it's also easy to take for granted. When I look back at my career and the people that I've worked with and been around, and then if I do start telling stories, I am taking it a little bit for granted because I was there and I did it. And then when the people that you're talking to and they're going, really? Wow. I'm like, yeah, I never really looked at it like that. Gratitude, ungrateful, so and so.
I think it's also important for you to, so I actually think that I find it very interesting being like myself, because I think it's good to listen to the people who came before. I think it's always important to do that. And listening to your show, and again, like I said, Monty, and there's certain people where I always think there's a place for each thing. And it's like, where does each thing go? And I know with me, mine is new people coming into the industry, wanting to understand how to navigate the new space of how do you generate leads and build a business in this weird digital world that we're in right now. But I learn from people like you. So I learn from listening to people. I don't learn from, I listen to marketers outside of the industry. And then I listen to people who have been in the industry, really, as you said, as we started this off with, pre-credit crunch. Clients of mine who've survived the war, so to speak, as you said, they become just as much of a mentor to me as I am to them with what they do. I ask them all the time, what would you do? What would you think about this? How do you see? Because I think that, as you say, it's not an entitlement. I think it's just ignorance because you don't know any better. You've not gone through it at this time. And it's one thing that hit me is I've been in mortgages for coming up to 12 years, I think, or 10 years, something like that. I can never, again, I'm rubbish with times. Me, ADHD and dyslexia, can't keep track of everything. So rubbish mortgage broker, if that was the case. But it was like, it hit me when weirdly people would come to me for advice and I would think, I don't know what I'm talking about. And then it was like, oh no, these people have been in the industry for 2 years. And then all of a sudden you're like, oh, when did I, and you've probably, and this happens each time, it's when did I become that guy that now is the guy that I would have asked? And I think it's important to have, so you saying like about Rob Sinclair, I think it's important to have the people, as much as it's good to them to sit down, that also that a lot of them don't. Because I think that if we lose that, we do lose where we came from and the voice of reason a lot of the time. We have to stop. We've been here before.
Yeah, there is, again, the other side of the coin is that it's important for people like me to learn from people like you and the younger generations and not be just stuck in our ways and saying the cliche of the older person, the sort of curmudgeon is like, this is the way I've always done it. And I think that's really important as well, because that then helps you stay current and relevant because life goes on.
So what have been one of the things I wanted to ask you then? So since the kind of credit crunch, what has been some of the biggest, there's been so many changes, but for you, if you were like 2008 to like now, what has been some of the biggest change, the thing that you see has been fundamentally different, that you look at it and go, this, I never would have thought 2007 or 2006 that it would ever be like this today?
That's a great question. And I probably don't think that far ahead. Never thought. I think the biggest thing that, apart from when we talk about regulation, but regulation is what it is, and we work with it and it makes the industry better. So it's not that, it's actually sourcing systems, and especially from a sales perspective, because before the introduction of sourcing system, you as a salesperson, you were going up and down the country, as I spoke about earlier, saying you're the best lender in the world and you can help with lots of stuff and this is the criteria. And from brokers, having been a broker and a packager and a lender, when I been a broker in the past, you'd have your favorite lenders, because they were the ones that you knew the criteria inside out, back to front. But it was those lenders, you get that deal in that wouldn't fit that lender. And this is before the advent of packagers, because of course now I'd say use your packager. And you would then have to have, I remember having boxes of business cards, and you'd be picking out the business cards. Oh, I wonder if they'll do it. I wonder if they'll do it. And you'd be picking up the phone and having that conversation. And next thing, tomorrow they'd be down, you'd be talking about the deal. And when sourcing systems really got a foothold, it's still important, as I say, from a relationship perspective, that the salespeople are there. But from a lender perspective, when you're back in the fortress and you are putting product together to go to market, you are absolutely on the ball in respect of sourcing every single day. Every single morning, you are looking and going. Whatever lender you work for, you will have your own strategy about where you want to appear in the sourcing. And whether that's number 1, whether it's number 10, whether it's as long as we're on the first page, you will have that strategy. And so every day you would be looking to see where you were in the charts. And that isn't something that happened before. You didn't have that pressure to constantly look and change and quickly move like that. You would just move when you heard somebody else had moved. Yeah. Or you would, if you're not achieving target as a lender, you'd write, okay, can we afford to move? Let's be bold. But then you knew, but it would be a week. You might have a week head start on somebody else, which I suppose there will be some people say, yeah, that still happens to a certain degree. And the reason being is that with talking about Lambay, we had our own tech, and one of the biggest advantages of that was to be nimble, to be able to change rate and pricing straight away within hours. Whereas there are many lenders that can't do that. But it was everyone before sourcing. So I think that is for me a big change. I think coming back to your original question, what I'm surprised about that has happened, which is, I look back and I go, how did we let this happen? Is this. So when I started out in 1987, so as I say, I was at Hambros, and there was a short stint at Hambro Countrywide, the brokerage, and you had very intense training. And it was all about selling insurance products, because believe it or not, lenders did not pay proc fees. Okay. You didn't pay. I remember when we started paying proc fees at Hambros, it was like, what do you mean? We're paying them for the business. It's like, they earn the commission. They earn fortunes in commission. And so what it was is that you sold an endowment policy, basically. And
so the mortgage, the insurance paid for
buildings insurance, et cetera, et cetera. And that over time went away. Now, you could argue that things like the PPI crisis caused a lot of that to happen. But you still talk to networks and clubs, and they will say, oh, we're doing more and more protection training. We're pushing our protection. And it's absolutely is that if you're in front of a client and you're talking to them about the biggest financial transaction, in my opinion, and hopefully people don't punch me when I see them do, you should be, I'm not saying it's a hard sell, but it's explaining to them and actually going, look, this is your debt. This is what happens if you die tomorrow. What's going to happen with the rest of your family and all that sort of stuff. Yeah, and looking at budgets and saying, okay, what is your budget? Okay, we've done your income and expenditures. You're saying it's this and this. Okay, let's think about that. And it for so long, it almost felt to me like it was a bit of an add-on.
It was, yeah.
I was like, no, that should just be part and parcel of the transaction. So I think that was a real big surprise. So if you'd to answer your question, that would be it, I think, really.
On top of that was, because I don't know, so what was fees like back then? Did they have fees? Would you charge fees? Or I know you said you were in subprime, so I can imagine there'd be some fees on subprime.
So yeah, subprime there were fees, yeah.
Yeah.
Which you'd have 1%, 2% fees. Regularly, you would pay anything between 1% and 2% as a proc fee, whether it was if you paid a package of 2%, the packager will keep 1%, pay 1% to the broker. That was it. But prior to that, when lenders started to pay proc fees, the actual fees themselves were like 195, 295, sort of thing. So yeah,
that was the change. I think that's an interesting point as well, because I think that's I've never struggled with insurance and help people with insurance still to this day, as in coaching brokers to do that. But I have been blown away by it is an add-on to a lot of people. And then as procs are going lower and lower, a lot of these brokers are finding it hard to make any money because they've, as you said, they've forgotten how to do the job that originally that was the job. I remember the guy that Andrew Perriman was one of my trainers, the guy who helped me, and he used to say to me all the time, he was like, you get the mortgage for the insurance business. That's what it was about. And that's what it is about. He said, otherwise you won't make any money. And obviously you can make money with prop, but you have to work like a dog to make any real money with proc. And if you're a proc alone and no fees, I don't have a clue how they do it.
Oh, you've got to do it on a massive scale.
Like new build, isn't it? New build do that. And that's the problem. Maybe we always get someone who throws a new homes company, and I'm like, yeah, it's a different thing.
Or London and Country or something.
Yeah.
Massive volumes for that to happen. But that's another bugbear of mine. See, during the war, going back, when the Financial Services Act first happened in 86 or whenever it was, and brokers, they were selling endowment policies, and it was the holy grail. It was, look, you put your money in this endowment policy and it'll pay your mortgage off, and it'll probably pay it off early. That was the whole thing there. And I'm losing my train of thought, is, right. So yeah, so you didn't charge, as a broker, you didn't charge a fee. Okay. The whole big sell was no fee advice. And even then, in my, much younger years, I think to myself, hang on a minute. So an accountant, you go to an accountant, you have to pay him stuff. You go to a lawyer, you have to pay him stuff. But you go to a financial advisor and you don't have to pay him stuff. So it's like completely devaluing the value of the person that's giving the advice. And so I always looked at that, and if anyone says that to me, this is free, my view is there's no such thing as a free lunch. So what's in it for you? What are you getting out of it? Now, I don't mind if we've all got to make a living. So if you're making something out of it, fine. Just tell me what it is. And if I think it's fair, then fair enough. But that was, and I think we still got a bit of a hangover from that. I still see there's debates on LinkedIn when people say, oh, I don't charge a fee. And then people go, why not? What, you don't value yourself enough and your time and your expertise to not actually charge anything at all? That is
a topic you want to avoid on social media I get that. Like I'm with you. So people know where I stand with fees. I don't work with no fee so one of my criteria to work with me is you have to be a insurance selling and fee charging advisor, because for me, my belief of that is I want to take real brokers who do the job properly, and I get told off for that, but I don't care. It's my thing. You can take my stuff, but that's my idea of it. And also, you can call it what it is. People say, I don't think it's ethical. And it's like you're wrapping all these excuses up to say you are scared of asking.
100%.
That's all it is. But you're trying to make yourself have a higher moral high ground because you're just scared. And that's fine. Just say, I don't want to ask because I'm worried I'm going to lose business. And you go, great, I can help you get over that. But if you keep wrapping it up as a moral high ground, I can't help you.
Look what you've got to do, the work you've got to do to be qualified, have CMAP. Look at the CPD that you've got to do. Look at the consequences if you get the advice wrong.
Yeah, big.
Look at the whole compliance chain, the pressure. I know brokers that have been doing this for tens of years, and they will still moan about their compliance teams, if their networks, etc., saying, oh, have you done this? Hang on, I have. And then spend another hour with that compliance team explaining the whole situation. And it's, okay, so you're doing all of that and to get a 0.3% or whatever from the lender.
And then you always get somebody say, oh, but it can be pretty good if you get good fees. I'm like, yeah, but as in good houses. But the vast majority of houses, if you're in the city, I'm in Cambridge, it's a higher property values, but the vast majority of people aren't. You need to be over 500, 500,000 plus for it to be at all slightly better, especially if you've got introducers, people are taking, there's not a lot left of the pie if you haven't put those things in already. It just really doesn't work.
Yeah, totally agree.
Oh, we could chat forever. And I'm looking at the time. I was like, wow, I just realized how long we've chatted for. So people want to learn more about you. You've got podcasts, you work in the industry. Just this is your little pitch here, your shameless plug. Where do people want to go? Because I think the people listen to this will have a lot of value listening to the stuff you create.
Yeah, that's very kind of you. Thank you very much. I'm very much an amateur compared to you, of course. But yes,
He has to say that because he's on the show. He's read Robert Greene's 48 Laws of Power, and he's pandering to the king so that he doesn't get his head chopped off. Is what that is.
Andrew Montlake, Louisa Cedric, and Lee Karasavas and I are having lots of fun presenting the Mortgage Mingles podcast. And what we try to do there is, it's if you've come together at the end of an expo or the beginning of an event where you're all together and you're just having a chat and about what's going on in the industry, in and around the industry now. It's very informal. We have a bit of fun on there as well, but we try and keep it light but topical. That's one of the things I do. The other podcast I do is the BTS podcast, which is Beneath the Surface. And a bit like yourself is that I'm looking to try and get under the surface of people that have a passion. They may be they've got their own business, they're CEOs of tech companies, and talking to them about their journeys, their positives and their challenges. And something that you very much empathize with, and I'm sure you'll get this, is that when you've got your own business, it can be very lonely. And sometimes it's nice to hear that somebody else has actually gone through the same stuff you have. You say, oh God, all right, I'm not alone. That's great. So yeah, that's really good too. And I'm leading a project to relaunch a brand called Private Label, which is really exciting as well. And we hope to get that launched within days. And that will be offering loans of 500,000 or more to people that have complex incomes, that need interest only to 90%, foreign nationals, and lots of other fantastic bits and pieces like that. But yeah, lots going on at the minute.
I love it. We'll make sure we link all of the stuff in the show notes as well. So I'll get the links from you for the podcasts and stuff. But Paul, I have thoroughly enjoyed this. Like, really enjoyed listening to you, and very much listening to you. Like, that's what I would say to people. Like, for me, I could sit and talk to you for hours. I think there's so much value in the stories you're sharing that I'm more of a listener here than you. Yeah, I love it. I absolutely love it. I think it's wicked. I highly recommend. I listen to the Mortgage Mingle. I think it's brilliant. And I would highly, and I'm going to go and check out the behind the scenes now as well. I know the behind the scenes Beneath the Surface, as per BTS BTS reminds me in my performing arts days, behind the scenes. No, I love that. We'll check it out. Paul, any other parting words before we round this one off?
No, just keep doing what you're doing. I think it's so important for especially brokers to engage on social media, because that's where especially the younger generations are getting their content and information. So it's great work.
Thank you very much.